It may be that you need a cash flow forecast for a bank loan. And with our cash flow Excel template, this is very easy to do. It's set up to take up to 10 hire purchase or loan accounts. And in this case, you can see that the first loan, or in this case a hire purchase, it has an opening balance of 12,700. I'll come on to opening balances in a minute. Next, you have various adjustments and settings that you can apply to each one of your loans. The first one is whether the interest is charged directly to the loan or straight to your cash flow. Sometimes a bank will charge the interest directly to your current account, or in this case will be in the cash flow forecast itself, and other times the interest is charged straight to the loan. This is a simple case of switching this from either yes or no. This hire purchase is set to yes, so the interest will be charged straight to the hire purchase account. The next column is for setting the interest rate, which in this case is 4.9%. You simply enter the interest rate for the loan or hire purchase in this column. The next one is whether or not your loan is paid in lump sum payments. If it is, select yes, and then on the data entry template you simply go there and enter the lump payments, and I'll come to that in a second. You can mix and match. You can also have lump payments as well as the automatic loan repayments. And depending on whether you set this setting to yes or no will depend upon whether the loan will take into account the lump payments and the automatic payments or not. The next column is to enter the term of your loan, and in this case there's 35 months left remaining on this hire purchase account. After that, it's the first payment month of the loan or hire purchase, and to adjust this, select the drop down and select how many months forward you want the first payment of the loan. The next is a final lump sum payment, which is slightly different to the lump payments facility over here. This one is where you take out a loan and you've got so many payments until the last payment, which is a final lump sum. You also have the facility to set in your own payments, because sometimes the automatic payment calculation may not be quite the exact amount of your loan repayment. So you have the facility to override the automatic payment facility. Finally, you've got the loan name, so you can just select from the drop-down menu your chosen name for this particular loan. And if the name of the loan is not there, simply scroll down, and here you've got all the names that were in that list, and you would just overtype one of these to the loan name that you require. You would then return to your list, and you would be able to select your new loan name from the drop-down list. We mentioned about opening balances. Opening balances are entered on the opening balance template, and in this case you can see that hire purchase 1 has got 12,700, and also that bank loan 1 has an amount brought forward of £125,000 too. And if I just go back to the information sheet, you'll see that bank loan 1 included in the heading there is the £125,000. Quite simply, if we wanted to enter hire purchase 3, we would just put the amount in there. On the data entry sheets, which is the forecast period information and numbers, you just simply enter when you receive the loan if it's a new loan during the year, and in this case you can see that hire purchase 2 has received 12,500 in the second month, or in this case February 2018. Also, you can see that we've entered an amount in the lump payments for hire purchase 1 of £5,000 in month 1. All you would do is enter these in whichever month you want to enter the loan lump payment. After that, if you go to the reports, you can then print these out. And notice that this got a warning of a difference. That was because what I did was I entered an extra amount in one of these entries, but I didn't put the corresponding entry to make sure my balance sheet balance. So I'm just going to take that back out again. And notice that that sign has gone. So in this case, we've got no repayments automatically, but we've got a lump payment. But if I come back to here and I change that back to no, it'll give me my automatic repayments plus the loan lump repayment too. But if I want to take out the lump repayment and just be left with the automatic repayments, they are there. And now that's got a blank line, so quite straightforward. I just do a Control N and it will get rid of that line, ready for printing. For each of your loans, you've got a separate report. So this was your loan that was taken out during the year. And for each of them, you've got your total repayments, you've got the interest, and then the capital sum borrowed. And it will split it out between each of the months. And in this case, you've got your new loan and received of $12,500, the repayments and the interest. Going down to the brought forward one of £125,000, total repayments, interest, term 108 months, opening balance £125,000 as we know, and then you've got your repayments going through each of the months and the interest too. All of this information is reflected on the cash flow forecast. So we've got our loan repayments here on the cash flow forecast, and we have the financial overheads on our profit and loss forecast in summary format. So we want to see a breakdown of that. We go to our overhead report, and on there we can see the loan interest that's charged there. And then finally, if we go to the balance sheet, you can see that you've got loans and hire purchase, this amount here, which is falling due within 1 year, and then you've got amounts falling due after more than 1 year down here. And the cash flow forecast template calculates that automatically for you.